All right, guys, quick video to go over Chapter 8, which in Chapter 8 we cover current liabilities. Current liabilities are basically the current portion of the obligations that we owe as a company, such as any kind of debt, any notes, any accounts payable. Uh, the chapter really covers interest expense payable and how to book those entries, payroll expenses, and then other contingencies. So we'll start off with accounts payable and notes payable. The thing just to know about these is both of these have a credit balance. So anytime that you book an entry, well, I'm not going to say anytime, most times that you book an entry for these accounts, they're going to be a credit. So let's say as a company, we purchase some equipment, right? And we pay for it via accounts payable, right? So our debit would be debit equipment, credit AP, right? Let's just say 1,000. Okay, and then when we get ready to pay this transaction from AP, what we'll end up doing is debiting AP and then crediting cash. For notes payable, the entry for notes payable works the exact same way, except you would have notes payable. But in the book, it introduces the interest expense related to notes payable. So anytime there's an interest expense paid or even received, right, we have to record that separately. We cannot record the interest expense or interest payable to the note. So what we'll end up doing is we will, once we get our note recorded, so let's say we bought a car, right? So we'll debit vehicle for 25,000, and we signed the notes payable on that vehicle for 25,000, right? And let's say we have to pay interest. I don't want to get into the whole interest calculation thing. The book goes through the interest calculation. But anytime that you have to pay interest on that note, your debit is going to be interest expense interest payable, right? So don't get confused when looking at notes payable, thinking that interest payments that the company makes or that you make should be going to the note payable. The interest is looked at completely separate from the note. The note is used to calculate the interest, but when making the journal entries, you want to make sure you debit interest expense and credit your interest payable.